Right traders, welcome back to the channel. Here we have the regular EURUSD and GBPUSD Forex outlooks going into the week ahead, right? So we have bank holiday on the 27th of May in the United Kingdom, but around the world, of course, trading remains as usual. So let's now get into the weekly outlooks for EURUSD. So again, what we have over here is we've had a bullish week. We've had a bullish rally since it's been just over a month now. We've had a bit of a bullish rally. Last week also gave us a bullish candle overall. I mean, we've had what we can call, closing top candle. We've just had the overall rise towards bullishness. Again, what we have is we have two draws on liquidity. One draw on liquidity at 1.044 and one draw of liquidity at 1.0845. So from here at this level, you have to ask yourself, where are the targets? Well, if the bullishness does continue, what you need to understand is this is a draw on liquidity. And the reason for that is because it's a weak structural high, right? It's a weak structural high, meaning it hasn't actually broken the low, which is all the way down here, right? This is the swing low down here. So this now remains an area of liquidity or draw on liquidity. Now, if the bears do suddenly start to kick over, then of course, this is the next draw on liquidity. And we have a POI down here, which is at 0.998, right? 0.998, right? So these are the two overall outcomes and perspectives I have on the euro dollar weekly time frame. Now, the weekly time frame only shows us so much. We need to go down to the lower time frames and see what those time frames are also telling us. So now if we head down to the daily time frame, the daily time frame, again, there's four things I look at when it comes to analyzing a bias, right? We look at structure. So let's quickly label these at the top. So we look at our market structure. We look at what dealing range we are in. We then follow that up with PD arrays. And last but not least, we look at our inefficiencies or fair value gaps. So these are the four driving pillars towards market bias success, right? So now from here, we understand a couple of things. We understand we're in a bearish dealing range. So we've got a structural high up here and a structural low down here. This is the swing structure, and this gives rise to PD arrays, right? So the PD arrays essentially are calculated or at least shown in the chart by projecting the Fibonacci from the swing high down to the swing low, just like this, right? So from here, we have fair value gaps in the premium up here and the discount down here. So my overall thesis for euro dollar based off the daily time frame is quite simple. We have filled some fair value gaps over here to the left. We haven't quite come into this zone, which is fine, but we're reacting off a firmly discounted area. We've filled some of the fair value gap here. And from here, the way that I'm currently seeing euro dollar, if the bullishness does continue, which I think it will, we have buy side liquidity in the form of a trend line over here. And we have the daily POI over here that's left a fair value gap. And we have a fair value gap above, right? So we understand from an interbank price delivery algorithm perspective, right? We understand that the IPTA will seek two things, right? Two things I've just mentioned. The IPTA will seek liquidity, and the IPTA will seek to fill fair value gaps in price. So liquidity and fair value gaps. Two things that the market will seek for higher prices, which is what I think the market is likely to do next. So now if we head over to the pound dollar or the GBP/USD, let's start on the weekly time frame. This market for me is a little bit more clear and less subjective in the sense that what we've had is we've had two demand zones over here, right? So just to quickly give people a perspective, we've had a demand zone here, which created an internal high, which held, and we had a second push up, and we've also had a demand zone. So two fair value gaps here and here have held successfully. So from here, you have to ask yourself, based on a bullish perspective, we have two draws on liquidity above us, right? We have this high over here. That is a draw on liquidity. And the reason why this is a draw on liquidity is because it's a weak structural high, exactly like we had on the euro dollar time frame, where this structural high had only pushed down to this level over here. The low is all the way down here. Again, marking out structure is a separate video. I've covered this in other videos, so I recommend checking those out as well. But this is a weak structural high. And the reason why this is a weak structural high is because it hasn't broken a new low. So this is an area on liquidity, and it's the next draw on liquidity. So the overall perspective I have for GBP USD is quite simple. I do expect this weekly draw on liquidity to be targeted, and eventually we should see prices come up to this POI over here, this weekly fair value gap. Just like before, like I said, the markets seek liquidity and the markets seek the fair value gap. And we have two of these right here. So now if we go down to the daily time frame, the daily time frame again paints a very similar picture where what we've had is we've had bullish structure for quite a while now. We've had higher highs and lower highs and higher highs and lower highs. And now we've come into a discounted area and we've come into another discount. So we're currently in a firm discount. So this is from a zoomed out perspective. So if we go into more recent price action, yes, the dealing range itself is bearish, right? This here is a bearish dealing range, which I've highlighted in yellow. But you have to ask yourself, we've currently reacted off a discounted region, right? So notice how, just like the euro dollar, because these two pairs have a correlation with them, what we've had is we've filled the majority of this fair value gap over here. Price has come into this fair value gap, which is firmly priced in the discounted area. So this is the 50% level. So let's quickly label that for people. This is the EQ. So anything below the EQ becomes a discount. And the way the discounts work is we have a fair value gap over here and we're in a discount. So we've just reacted off a discount. And from here, you now want to ask yourself, as an ICT trader or as a trader as a whole, regardless of what you trade, right? Inefficiencies and fair value gaps are the two driving factors when it comes to determining an overall bias on any market, be it Forex, futures, crypto, indices, commodities, you name it, right? The overall underlying pinnings of any market are as such. The markets move up for two reasons. And this is the main takeaway I want people to understand. The markets move up for two reasons. It moves up to seek liquidity, and it moves up to fill inefficiencies, otherwise known as fair value gaps. This is the basic principles of IPTA, right? Another ICT principle is that we move from premium to discount. So we've just gone from a discount up to a premium. So discount up to premium, right? But the two things the market aims for when it moves up and down, but we're looking at a bullish scenario. When price moves up, what we're essentially looking for is we're looking for price to target liquidity, which is beautifully put here, engineered in the form of a trend line or a trend line phantom. So this remains the buy side liquidity. And we have a fair value gap over here. So this is a daily fair value gap over here. If I quickly mark that up for people, this is the daily fair value gap. This is a void in price, right? An area which the price chart hasn't filled fairly, and in which case this becomes a fair value gap, and we look to target that. Okay, so again, two things we need to look out for: liquidity and fair value gaps. Always ask yourself where they are, and from here we understand we've reacted off a discount. So the overall narrative for GBP/USD over the next few weeks is definitely bullish up to this particular POI. Okay, so if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.